Happy morning, people. Little Josh would be nice. Yeah. So again, welcome to the first session of our Advanced Accounting CA Interca Marathon. In case you're seeing me for the first time, I'm called Sandesh, right? I qualified in 2012 and since 2014, I've been in the teaching field. So I should definitely start with this. Thank you all for the amazing love and support that you have shown us in general by buying our classes or signing up with your time or trusting with you with your time and money. And the last two marathons was crazy. You have given an amazing love and support. I'll try my level best to kind of keep up the same momentum, if not better, right? So yeah, having said that, so let's, without wasting much of a time, so let's dive into the today's session. All right. So I'll just give you a quick overview as to what we'll be doing in this particular marathon. I'm planning to do this marathon here for face-to-face in Chennai for 5 days, right? So the timing will start at 7:30 sharp, very particular about that. So 7:30 we will start. Ending time, not 100% sure, right? We have a certain targets for each day to be covered. It could be 1:30 to 2:30 also at times if required. So have a proper breakfast and come. Okay, so that will be much easier that way. So ending time, you leave it to me. I'll take a call on that. Fine. So as much as possible, we'll try to cover the whole of syllabus within these 5 days. If by chance one or two topics remains, I will ask the team to kind of give you the recording from the last marathon. Right, and we'll try to avoid that. But again, since time is a little bit of a constraint, even I can't say with 100% certainty. Let's see how it goes. Is that fine? So that's the basic idea of how we'll be doing as such. All right, and one more thing is usually we get a lot of queries about, sir, we'll be using these notes for our marathon. This is called chart book. That's what the term we refer in our class. So a lot of the students post that how do we get this or where do we buy it from? If at all you're interested to buy it, you can log into our website, ArivuPro.com. Just go in on the sign in and it'll just pop in. Here you can see continue without sign in, and next to that you can see explore. Just click on the explore, right? It will take you to our homepage where all the courses details will be available, like what are the courses, like CA Foundation, these CA Inter, these are the papers. Like this, you will get all the courses with their price with a different validity. You can buy it. Same goes with the books as well. So if you want to buy those chart books, it will be available on the same website, right? Yeah. All right. For our regular class, I'm pretty sure we have done a revision videos using chart book. It's not mandatory for you to buy it. You can refer that. That's absolutely your call. Okay. Having said that, so let's go for the first topic. Zindabad. First topic, ennapa? Internal reconstruction. Or maybe first I'll tell you today what we're going to be doing. The idea is to cover internal reconstruction. First day, no, bonanza, bumper, amalgamation, consolidation also take. First day only we will do a good. So feel good factor should be there. I always believe in the toughest topics, first you finish. So that confidence will increase. So you have that mentally, you're prepared that amalgamation aicha, consolidation, okay, then it's fine. Right? We have few standards which kind of scares us, no? So let's do that first day and then we will do it. So internal reconstruction, amalgamation, consolidation, AS 23, 27. If time permits, AS4 and AS5. That is an add-on topic. So chota chintu teach into topic, we'll try to squeeze in. Those are the targets for today. Okay, Naji? All good, Aji? Start, Ji. You have to show a little Josh, Ji. How's the Josh, Saru? Sir, hey, last bench shout pa little. You're able to see it, or TV mode, okay. Or early morning, you're still sleepy. Tell me honestly, you're woken up, pakka you're woken up. Everyone? Yes, sir. Okay, fine, sir. All right. So first topic now we'll be taking up is internal reconstruction. Okay. Sir, again in this marathon also, as someone was pointing out before we started, we'll be doing concepts. All right. All the concepts necessary for the questions and few questions from each topic we'll be taking up just to kind of have a better understanding of that particular concept. Right? Number of questions, you leave it to me. That could be little more or little less based on the availability of time with us. Okay. Internal reconstruction. Internal reconstruction. Name itself is saying internal reconstruction. So this particular activity is done by usually loss-making company. Which for companies? Loss-making companies usually resort to this activity. Sir, when the company is suffering a loss, what will come in mind? Heart to kidney everywhere, what will come? Let's sell off the company. Here we are not selling the company, we are internally trying to revive it. Internally we are trying to make it survive. Hence the name internal reconstruction. Rather than selling the company, internally we are trying to bring about certain policy changes so that company can still survive. That's the meaning. Is the meaning okay? Alright. And usually it is done by which company? Loss making company. Usually, not mandatorily, but in all of our questions you will see that this is a loss making company and they have introduced the following scheme of reconstruction. Fair enough, people? Alright. Now, what here the companies will do is in internal reconstruction, my company will go begging. They will go begging in front of stakeholders. I'm not using the word shareholder, I'm using stakeholders. What's the difference between a shareholder and a stakeholder? Shareholder means our equity shareholders and preference shareholders. Stakeholders means every goddamn person who has some association with the company. That could be equity shareholder, preference shareholder, bank loan people, debentures, creditors, employees, whoever has any sort of a transaction or association with the company, they are referred to as stakeholders. And in internal reconstruction, company will go begging in front of whom? Stakeholders. And what will the company ask? The company will ask the stakeholders to sacrifice a portion of their claim. They will tell, suppose we have to pay the creditor 10 laksha, 10 lakhs. Company will go to the creditor and say, hey macha, instead of 10 lakh, let's settle for 7 lakh. Let's settle for 7 lakh. How much Tirupati toss creditor is going to take? 3 lakh. That's all is going to happen in internal reconstruction. The company will approach and ask the stakeholders to sacrifice. So why will the creditor sacrifice? We will put butter. Hey macha, now you sacrifice, noda. After my company survives, I will give you more business. For the time being, you adjust. Adjust Madkoli is our second name. No, we are Indians, right? We are fine. We are emotionally very, very high. If someone brings in Amma, Ma, then we will say, take everything of mine. Correct or no? So that way, right? So here in this particular topic or in this particular activity, the stakeholders will forego a portion of their claim. That could be 10%, 20% or even 100% Tirupati toss also. The question will specify how much is sacrificed. Dana Saru. All that sacrifice happens, no, that will be routed through one dummy account. That sacrifice will be routed through one account. That account is known as what? Reconstruction account, or also known as capital reduction. All the sacrifice will be routed. Just to pass the sacrificed entries, we use one account called reconstruction or capital reduction account. Some books, old books, private books also used to call reorganization account also. Our ICI mother body uses only these two. So we will stick to that. One of the two you can use, but use only one. First journal entry may I will use reconstruction, or second may capital reduction, venda. Only one, either reconstruction or capital reduction. Meaning is okay for everybody. So far good. You're getting the approach of how we are doing this marathon, right? This is the way we'll be doing it, right? Concepts and certain questions also we'll get to it. Can I go further? Okay. Now people, now sacrifice has happened means we are accounted. So we need to pass what? Journal entry. So now the entry, some basic entries will be thrown across over here. First, what if equity shareholders is ready to take the Tirupati toss? Okay, let us say old equity share capital was 1 lakh. Assumption. Old equity share capital was 1 lakh. Equity shareholders told, I will sacrifice 60,000. They are ready to sacrifice how much? 60,000. That means how much is the new revised or revived equity share capital now? Is it 1 lakh or is it 40 now? 40. Tell me what is the entry. Don't look at that screen. Old equity share capital, old equity shares there or gone? Gone. Equity share capital has what balance? Credit balance. In accounts, we don't have plus minus. We have only debit to credit to. If something which has credit balance, if you have to reduce it or cancel it, what we'll do? Debit it. So what's the entry? Equity share capital account debit. How much is the old value? 1. What about the new? Is equity share capital fully gone or it is still there? What extent? 40,000. That means you will credit the new equity share capital at what value? Balance 60 is Goinda. That Goinda is routed through which account? Reconstruction. That's fair enough. The same entry will hold good for preference shareholders ka sacrifice also. If preference shareholders sacrifice, tell me the entry. What entry you will pass? Same 1 lakh to 40, 60. Take the same number and fill up the entry for me. 10% preference share capital. Tell me this. 10% preference share capital account debit. 1 lakh. To what? To 10% preference share capital. 40,000. To reconstruction account. 60. Fair enough. That's usually this will be there in almost every internal reconstruction ka adjustment. One is this. Now, if it's a loss-making company, do you think their assets will be fairly valued or overvalued? Suppose I am running a loss-making company. I am showing patent at 1 koti. How much? 1 crore. Do you think my patent will be valued at 1 crore? Sir, if it is valued at 1 crore, do you think I will suffer such a huge loss? No. But in my balance sheet, I am showing patent at what value? 1 crore. But is it really worth 1 crore? May not. So hence, in these sort of setup, company ka assets will usually be overvalued, and through internal reconstruction, we are getting the assets and liability back to its true value or fair value. Okay, people? Usually assets will be overvalued, which the question will specify. Okay, so let's look at this particular scenario. Let's say there is a patent which I am showing in my books. How much? 1 crore, but its value is 0. Its value is 0, but I am showing how much? 1 crore. Tell me what you should do. Keep it or cancel it? Cancel it. 10% extent, 40% extent, or full 100%? Full 100%. Patent is an assets. Assets have what balance? Debit balance. How do you cancel something which has debit balance? Credit. And all these scheme ka entries is passed through one dummy account called reconstruction. So tell me complete the entry for me here. Reconstruction account debit to. That asset could be patent, it could be debtor, it could be your plant and machinery, it could be whatever. But the entry is still what? Reconstruction account debit to respective asset account. Don't write sundry asset. If 4 assets are reduced, you need to pass how many journal entries? 4. 4 separate journal entries, or you can do compound journal entry. Don't write sundry assets. For each asset which has undergone a reduction, you have to show it separate. Fair enough? Yes, sir. Move on to the next. Alright, next aspect is P&L written off. Sir, why am I doing this internal reconstruction? Right? I'm a loss-making company and I'm asking the stakeholders to sacrifice so that I can remove that loss from my books. Because shareholders or stakeholders are ready to sacrifice. Even after doing internal reconstruction, if my P&L balance shows loss, do you think actually I've done any internal reconstruction or no? So that means what should we do for this P&L? Write it off. Right? And P&L, if it's a loss-making company, their P&L will have what balance? Credit balance or debit balance? Debit balance. Why? Loss-making company. See, how do you get profit? If you're confused, how do you get profit? Income minus expense. Now go back to your childhood, bachpan. Our first 11th standard teachers taught us, no, nominal account rule. Ennapa? Debit all expenses and losses. Credit all incomes and gain. So expenses will have what balance? Debit balance. Income will have what balance? Credit. If you want to get profit, means income should be more than expense. That means only if income is greater than expense, you will have profit. Right? If expense is greater than income, means loss. That's the reason if it's a loss-making company, P&L will always have a debit balance. Because expenses will have a debit balance. Is that okay with you? Should we keep this or write it off? Write off. Now, solunga. P&L has what balance now? Debit balance. How do you cancel it? Credit it. Here all the cancellations are routed through which account? Reconstruction. So what is the entry? Reconstruction account debit to P&L. That's the entry. And this is one adjustment. Sometimes the question will not mention. They will not tell. Whether the question specifies or they don't specify, this adjustment compulsorily you all have to do. Okay, provided reconstruction account has enough. If you have sufficient balance in reconstruction account, then P&L balance has to be compulsorily written on. We'll do it in one of the problems as well, but just say. Okay, keep in mind about this. Sir, do you think only assets will get reduced or even liabilities can get reduced? Entry solangappa. Now, in our example, we told creditors is ready to take up Goinda. So, what is the entry for creditors Goinda? Creditor is a liability which has what balance? Credit balance. How do you cancel something which has credit balance? Debited. So, the entry will be what? Creditors account debit to reconstruction. So, or here I have written a sample entry. Basically, you will debit if a liability is getting reduced, you will write liability account debit to reconstruction. That's all you'll have to do. Here I have just summarized in 4 entries, but the same thing will be given as maybe 10 or 15 adjustments in the questions. Because not one assets will be reduced, there will be 5 or 6, etc., etc., like this. That's all we'll have to do in this internal reconstruction. Few journal entries. After this, at best, they may ask you balance sheet. That's all is internal reconstruction. Any doubt so far? Can I proceed so far? Even the last balcony. Okay, now that side, this side. Though I'm not able to see you. All okay? Pakka? Little tell pa. Use your words. Yes sir. Yes sir. They're saying. You carry on. Okay, macha. Don't scold and all. Fine. Sir, as I said, what? One more, just previously I just discussed one thing. Whether the question specifies or not, you will cancel what? P&L debit. Along with P&L debit, if you have any preliminary expense or if you have any deferred revenue expenditure, if at all you have, these 3 also you cancel. Usually this is outdated adjustment now. Most probably you will not get it. But in case if you see in the balance sheet, P&L debit balance, preliminary expense and what's up? Deferred revenue expenditure, cancel that also. All these 3 will have debit balance. All these 3 will have debit balance. How do you cancel it? What is the entry you will pass? Reconstruction account debit to P&L account to preliminary expense account to deferred revenue expenditure. Either pass 3 separate journal entry or compound journal entry, your choice. But do watch out for this. You will have to do this even if the question does not mention. That is one thing. Sometimes, rare, okay, in some questions we see, there will be some reserves. Actually, it is illogical. Why? Sir, reserve, when I say, I'm talking about general reserve and all, right? How will general reserve come into picture? When you transfer from P&L to general reserve. When you transfer some amount from P&L to general reserve, your general reserve will have a balance. First of all, your company only going there. You are a loss-making company. So, do you think they will transfer some money from P&L to general reserve? Or first of all, is there any balance to transfer or no balance? No balance. So, this is a very rare adjustment. But as I always say, don't question the question. Just go with the flow. If the question says we have some reserve like general reserve or capital reserve, utilize it. Utilize it for what purpose? Internal reconstruction purpose. Okay. Meaning you can use this for your internal reconstruction activity. Now, what do I mean by that? Okay, general reserve has what balance? Any reserve, if you're confused about this, always go back to the basics. Where do you show reserves in balance sheet? Liability side. All liabilities will have what balance? Credit balance. So obviously reserves also should have credit balance. Now general reserve has credit balance. Can you utilize that now for this scheme? Yes. The utilization is done through one dummy account. What is it? Reconstruction. So tell me the entry for this. General reserve has credit balance which you are utilizing. That means you will have to cancel general reserve. What is the entry? General reserve account debit to reconstruction. That's if at all it is there, you can use it. Same goes for what? Capital reserve also, if at all, only if it is available. Usually if it is available, question will specify that you can utilize it. So you can pass this particular journal entry. Done, Ji? Yes, sir. Okay, sir. One more important adjustment which we usually see in almost all the question is, this I think I had given to you, if you remember our class notes, we made a good amount of discussion for this. Same point, I brought it in the chat book. First, I'll tell you the point and 2 minutes quickly I'll try to like summarize what this is. Sir, if dividend is sacrificed, listen to me what I'm saying. If dividend is sacrificed, okay, then no journal entry is required. If dividend is sacrificed, then no journal entry is required. Anybody remembers the logic of this, which we have discussed in class? Some of you are recorded students. Yeah. Perfect. What's your name, ma? Manasa. So Manasa is saying, hey macha, you only taught okay, if you have not passed an entry for it, where is the need for cancellation? Or just to go one step back. Which company? Profit making company or loss making company? Loss making company. Loss making company will declare dividend. No. Sir, what is a journal entry for dividend declared? Tell me, what is a journal entry for dividend declared? What is the journal entry for dividend declared? When you declare a dividend, P&L balance will reduce. Right? And which companies will declare dividend? Profit making. Profit making companies will have P&L debit balance or credit balance. So when the journal entry for dividend declaration is P&L account debit to dividend. That could be equity dividend or it could be preference dividend, whatever. If it is equity, if it is preference dividend, we will credit preference dividend. If it is equity dividend, we will credit equity dividend. Let's say this is, or leave this. This is the entry. Are we clear? This is the entry for what? Dividend declared. You only declare and keep quiet, or you have to also pay. When this dividend gets paid, what entry you will pass? Preference dividend, or you can call it dividend payable. You can call it as proposed dividend. There are many names for this. So when you pay, the journal entry you will pass is what? Dividend account debit to bank. Yes, sir, people. This is for declaration and this is for payment. Okay. Now come back to this topic. Which company? Loss making company. Sir, for loss making company, do you think this entry will come? Do you think they would have declared a dividend? No. Right? So now this, sir, when you say you have to cancel something, if you want to cancel something, it should be there in our books. We should have a ledger journal for it. Correct? No. When you pass a journal entry, then you will have which account? Preference dividend account or equity dividend account. Correct? Now, this loss making company, have they passed this entry or not passed this entry? Not passed. Why have they not passed this entry? Because have they declared a dividend or not declared dividend? Not declared. Now, preference shareholders are become Darala Prabhu Karna. Preference shareholders are telling, take the dividend. I don't want. No need to give the dividend. So, since last 3 years, company has not given dividend. And preference shareholders are telling, no problem, take it. I'm in a good mood today. No need to pay the dividend for me. For how many years? Last 3 years. Correct? Now you tell me, should we pass any entry for cancellation here? Why? Because was this particular entry first of all passed in the first place or not passed? Not passed. Why was it not passed? Because the dividend was declared or not declared. Right? So since this account, this ledger account is not there in our books, cancellation entry required or not required? Okay now people, suppose this entry was passed, and then preference shareholders are telling, I will sacrifice. Dividend was declared because we have studied company law and all, no? Dividend once declared has to be paid within 30 days, I think, correct? My law provision is correct. Okay. Let's say 7th day preference shareholders told, keep it. No need to pay me dividend. Then you will say no entry, then you will have to pass entry. Because the dividend has got declared. But such adjustment they usually don't ask in our exams. Okay, people. So how will we know whether dividend is declared or not, sir? Check balance sheet. Balance sheet. Sir, what good will that do me? Sir, balance sheet means what? In simple way, any ledger account that has a balance goes to balance sheet. Any ledger which has a balance goes to balance sheet. If you are able to see preference dividend account on the liability side, if you are able to see preference dividend or preference dividend payable or equity dividend payable or proposed dividend payable, where? In liability side. That means what? Directly a component will come in balance sheet, or first there is an order. What is the order? Journal, ledger, trial balance, and then only balance sheet. So if a component is coming in balance sheet, that means entry is not passed or already passed. Okay, na? Correct. Now what are preference shareholders telling? They want a dividend or they don't want? No. Now, is this really a liability for the company or this liability is no more a liability? Now ignore or pass the entry. Pass. Correct. What entry you will pass then? This particular ledger you need to cancel. Correct. This ledger has what balance? Credit balance. How do you cancel? Something which has credit balance, how do you cancel? So the entry will be preference dividend payable account to. All this will be routed through which account? Done. Getting the clarity. Once you tell me, just to make sure this is an important adjustment, I want you to all of us be aware of this. You can tell in chorus also, I'll take it. What is the takeaway from this adjustment? Usually this will be there in almost every examination question. That's the reason I'm stressing. Is that okay? I'm not putting you in the spot. It's okay, no? To hell, you are putting in a spot. Tell. It's okay. What is it? What did we learn? What is the adjustment? Sir, if dividend is declared, you will ignore it or pass the sacrificed entry? Pass the sacrificed entry. Will the examiner ask like that, or what is examiner's favorite way of asking? In the balance sheet, will you see these accounts or it will not be visible? It will not be visible. If it is not there, then what is the indication of? Dividend is declared or not declared? Not declared. That means if it is not there in our books only, should we cancel it or not required? If it is there in our books, then we can cancel. If it is not even there in our books, how can we cancel? That is what I've written here. If dividend is sacrificed, then no journal entry is required. This scenario will hold good when this account is available in balance sheet or not available in balance sheet. Not seen in balance sheet. And usually that's the way examiner. Done, na, sir ji? Pakka na ji? Let's see how well you have understood. Sir, preference shareholder is telling 80% go in the 20% give me. 80% he is ready to sacrifice, but how much they want? 20%. Can they? This adjustment also we have solved a lot of it, percentage wise, fraction wise also we have solved in class. So tell me what entry you will pass in that case. I'll give you full scenario. Preference dividend amount is 1 lakh. Preference dividend amount is 1 lakh. You don't see preference dividend account in balance sheet. Visible in balance sheet or not visible? Not visible in balance sheet. Question ka balance sheet not visible. But how much is the dividend amount? 1 lakh. How much is sacrificed? 80%. How much you have to pay? 20%. Now tell me the entry. Entry required or not required? Required or not required or both? Entry required, not required or both? Both. Sir, 1 lakh is the dividend amount. How much sacrificed? 80,000. Sir, is this 80,000 available in your books or not available? Not available. Are we paying this or it is sacrificed? Is there any requirement to pass an entry to cancel this or not? We have not even accounted this. So should we cancel it or not required? So that means for this 80,000 entry required or no entry? Comfortable? Balance. How much are we paying? How much are we paying the preference shareholders? 20,000. If you have to pay something means you will ignore it or you have to pass an entry. Pass an entry. Correct? Yes. All right. Here. So entry you will pass. Let's say this 20,000 was settled through cash. Is that fine? So here, no people, in this particular internal reconstruction scheme, for every expense, for every income, for every expense and for every income, we route it through which account? Reconstruction account. No, sir. For expense and income, we have to use P&L. No, sir. For expense and income, we have to use P&L. But in this chapter, P&L is there or we have written it off? Written it off. See, first line only we wrote write off P&L. Using what account? Reconstruction account. So hence, even all the expenses and income also will be routed through the same dummy account called reconstruction account. Clear, people? Yes, people. Okay, coming back to this example, how much cash we have to pay to the preference shareholders? 20,000. Cash coming in or going out? Going out. That means you will credit cash bank how much? 20,000. You have to debit something. What debitor? Yeah. reconstruction or capital reduction account debit to bank account 20,000. This is again one of the examiner's favorite adjustment. Usually they ask like this. Some portion of the dividend will be sacrificed, some portion will be settled. Done, Sarji? Akka. Sir, suppose if it is not settled by cash, it is not settled by cash. Company is telling these preference shareholders, I will give you equity shares. I will give you. So this 20,000 is settled, but by cash or something else. Something else. What is that something else in my example? Equity share capital. So in that case, you will credit bank G or what G? If company issues equity shares, for the company it is equity shares or equity share capital. So if it is settled by equity shares, then instead of bank, you will credit what? Equity share capital. So suppose if it is settled by giving away machinery, rare. If it is settled by giving away machinery, what will you credit? Machinery. Yeah. That way, whatever is given as settlement, you will credit that. Okay. Now, usually it will be either bank or it will be equity shares. These two we have solved questions in our regular class, which ICI also has asked in their examination. Anything else till now? All okay. Move on to the next. Pakka ji. All right. Now, people, as I said, all the income and expenses also will be routed through which account? Reconstruction account. Okay. Let's go one step back. What is the journal entry for salary paid? What is the journal entry? Here, I think I've written salary paid 10,000. What is the journal entry? Salary account debit to bank account. How much? 10,000. Salary is an expense. Where will the expense get transferred? Forget internal reconstruction. Normally, all expense, all income you will transfer where? P&L. What is the transfer entry? P&L to salary. Correct, Aji? Add these two entries for me. What are you getting? Salary debit to salary credit to. Effectively, what is the entry? Effectively, what is the entry? If you add these two, in true sense, you will get P&L account debit to bank account. Correct? For all the expense, effectively the entry is P&L to bank. But in internal reconstruction, this P&L is there or we are writing off? Writing. Using what? Reconstruction. Hence, what should be the entry for expense in internal reconstruction context? P&L to bank or recon to bank? For all the expenses, the entry will be reconstruction account debit to bank. That could be whatever. That expense could be whatever. Salary, some penalty, whatever it is, we'll pass the entry recon to bank. Done, Aji? Sir, for expense, this entry means income or expense ka ulta or opposite is income. Tell me the entry for income then. Bank account debit to reconstruction account. That's all. You got no. That's all. Whatever we have discussed conceptually as just an adjustment will come as an adjustment in the bigger questions. All this will be collated and 8 to 10 adjustments they will make and throw it at you. Now you will have a sad face or happy face. Comfortable. Okay, I know that for our students and all, this is probably more repetitive. We have discussed in more detail and all, but it's come to lately of my awareness that there are a lot of students who are relying marathon for their exam clearing. They're only watching marathon and they're saying, in fact, some of them messaged me also. I'm not on social media, still on LinkedIn and all, they're messaging. Right? Sir, we are watching only your marathon sufficient. Right? I've told this n number of times, I'll tell you here also. Most simple principle of clearing is ICA ka full material. You should know once, you should revise once. Last 2-3 attempts ka RTP, revise once. Best possible way to crack the examination. If you are skipping anything, then you are taking a chance. Okay, when you are lazy, then you should not pass on the responsibility to the faculty. Okay, I tell them this only. Our regular class ka advanced accounting goes for 200 to 210 hours, I think, roughly. Marathon is roughly 30 hours. Now I tell you, okay, you suppose you love to cook biryani. You love to make biryani and you take 1 hour to make biryani. I told give me in 10 minutes. Make biryani in 10 minutes. Will the quality come out good? Same thing for faculty also. No? 200 hours ka content you are expecting me to cover in 30 hours. That means I have to speak faster. I have to skip a few things. I only can cover the highlights. So it's like IPL highlights going on. Okay. Right? Watching highlights is good only. Right? But to win the match, you have to play the match and not just What's the highlights? Yes or no? So my funda is I would not like to pass on the baton or responsibility to somebody else. Okay, if you pakka want to clear, this is my simple strategy. I am a simple person. I always followed this for my approach. Prepare everything from ICA resources. Then I don't have to rely on my friend, my girlfriend, boyfriend, faculty, nobody. You can just rely on yours. If you're skipping things, you're taking a chance. Sometimes it works. I'm not saying. I've heard like a lot of students reaching out to me after exam. Even this attempt also, they said, I watched your marathon and I got 60 ante. I was like, Daivame. Good for you. You are like, your luck is on a different planet only. Oh, sir. Right? 30 hours, like even I was saying, I only am telling in this marathon. We can cover everything conceptually, but every question in our regular class, I do this chapter, I do at least 20-25 questions. Now, can I do 25 questions? Right? I can do maybe one more time. See, already half an hour lost. I have another half an hour max. Maybe one or maybe two. So in 25, I am picking one or two that has good number of adjustments and I'm doing it. If they only come, then I am Daivame. Otherwise, you will give galis to me, my kanda, my everybody. I saw that guy's marathon. Nothing came. Waste of time. Oh, full class was full, but waste only. Correct or no? So sometimes it works, sometimes it doesn't work. So solely relying on marathon is what I would not suggest that. But rest is up to you, your best judgment. So, but I'll try my level best. In fact, I first remember first marathon, I think we did only for 16 hours or something. Then I realized how people are using this marathon. Then I realized let's do a little extended, little more, and we are doing it. But only this much is possible. Beyond this, difficult, sir. Okay, sir, I'll only tell you, it's your call, whatever you want to do. I know this is not the right thing to say, but I like to call spade a spade. I'm an honest person that way. Okay, so I would like to just say this. Just by clearing this, if you say you will crack, good for you, but I don't think so. I would be doing that. That's all that I would say. That means we'll walk out of the class, I don't do that. Huh? Yeah, we will try. Okay, use this as a revision mode. That's what I'm trying to say. Fine, people at the back of balcony. Okay. Done. They're not responding only. Probably Sapad Pasikadada. Yes, sir. Hey. 8:15. I thought I will give the break at 11:30. No, not 11:30. 9:30. Fine out. We'll finish this topic and maybe one more topic and take a break. Okay, deal. Deal. Let's do a thing. Let's see how many of you have paid attention. 5 minutes, quick recap of everything. Chapter name. Internal. Now I need some energy, all of you. All right, tell it out for yourself. It's okay. Chapter name: Internal Reconstruction. It is usually done by loss-making company. These loss-making companies' asset will be undervalued or usually overvalued. Usually overvalued. In this internal reconstruction, company will approach whom? Stakeholders and ask them to do what? Sacrifice. All that sacrifice will be routed through one account. What account? Reconstruction account. Another name: capital reduction. One of the names you can use. Fine. All right. This is done. Then, when equity shareholders sacrifice their claim, what entry you will pass? Old equity share capital you will cancel. It has credit balance. To cancel, we will debit. So the entry will be equity share capital account, debit. Sacrifice portion goes to recon account. And then, how much ever still remains, that goes to new equity share capital account. Same entry, instead of equity share capital, substitute with preference share capital for preference share surrender. Assets value reduced. Assets value reduced. What journal entry? Assets has debit balance. To reduce, we credit. So the entry will be recon account debit to asset. Liability reduced. What entry? Liability account debit to reconstruction account. Fair enough? Okay. Then anything else we saw? That's it. Okay. A few things, whether question says or it doesn't say, we still cancel. What is P&L account ka debit balance? Why P&L will have a debit balance here? Because it's a loss-making company. P&L debit balance, your preliminary expense, your deferred revenue expenditure. Cancel it. Whether question says or does not say. But reconstruction account should have enough balance to cancel this. Okay, that I'll show you in one of the questions. Okay, next. If you have by chance any reserves, like general reserve, can you utilize it? Yes. What entry? From general reserve, you're utilizing means transferring it to recon account. General reserve has what balance? Credit balance. How do you transfer? Debit. Entry will be general reserve to reconstruction account. Or instead of general reserve, you might also have capital reserve also in some cases. All right. Then, if dividend is sacrificed, what we have to check? First thing, the moment dividend comes, you'll go to question ka balance sheet and check what? Whether dividend is seen in the current liability side or not seen. If it is seen means what is the indication? Company has not declared dividend or they have declared dividend. They have declared dividend. And if that dividend is sacrificed, is it still a liability or not a liability anymore? Not a liability anymore. So what to do? Cancel. But how will the examiner usually ask? Will you see that dividend account in balance sheet or you'll not see? You'll not see. And what will the question say? And that dividend now is sacrificed. Entry required or not required? Suppose if they say some portion sacrificed, some portion settled. Like in our example, 80% sacrificed, 20% settled. What you will do? And in balance sheet, my dividend account is not available. Then for 80% entry required or not required? Not. For 20%, pass the entry. What entry? Reconstruction account debit to whatever you are paying. If you are paying cash, then you will credit cash account. If it is routed through banking channel, you will credit bank account. If you have settled through new equity shares, you will credit equity share capital. Whatever you are giving as settlement, credit that. Done as Sarji. And for all income and expenses also are adjusted through which account? Recon. Fine, because in this chapter, may P&L there or P&L written off. Written off. Hence, even income and expense also be routed through recon account. For expense, the entry will be recon to bank. For income, bank to recon. That's it. Done, Aji. Sir, after doing all this drama, Mirch Masala, reconstruction account still has some balance. Reconstruction account still has some assumption. After writing off everything, after doing all chillampilla adjustments, still, let's say 50,000 balance is still available in reconstruction account. Now, this internal reconstruction you will do every day. Yeah? Companies will do it every day or non-recurring item. Non-recurring item. For recurring items, you will transfer it to P&L. For non-recurring items, adjust is a revenue receipt or a capital receipt. All capital receipts are adjusted through which account? Capital receipt. So after doing all this drama, still if reconstruction account has a balance, that goes off where, sir? Capital reserve account. Because this is not a regular phenomenon, it is just a one-time activity. Not a revenue receipt, but rather a capital receipt. Hence, from recon, finally you will transfer the balance to capital receipt. If at all you have balance. That, how will you get to know that? You'll have to prepare reconstruction account, ledger account. That way you will get to know whether reconstruction account has a balance or no balance. No balance means Zindabad. Nothing to be done. If you have balance, transfer it off where? That's all, Sarji. Conceptually, we are done. Can we go and look through some questions? Remind me, question 3, I'll just come back to you and tell something about it. 1 or 2 quickly, I will. No, it's already. Okay. I think we overshooted by 5-10 minutes. So, okay, let's see. Let's try to cover up in the sums at least. Okay, sir, I've picked some questions. I've used mostly my class notes reference over here. Okay. So, question number 15 in our class notes. So, you don't have to worry about this. If you want to buy the books, it's available from our website. But most of our material is that I have not done any creativity. I've only copy pasted from ICA. ICA ka study material questions, RTP, MTP questions I've collated, summarized. That is our class material. That's all. So you will find this question in some RTPs or the other. Okay, so don't worry too much about the question. Just stay with me over here. How to review the questions. Sir, whenever they give you question in exam, no, don't go line by line. Especially for internal reconstruction, all this will be faltu. Waste. One dump of information, they will give it in 2 pages. One big balance sheet they will give. Another one big notes to accounts they will give. 2 pages will be that only. All these are waste. Chotte. Okay, waste. We don't need this. In balance sheet, what you really need to focus on is couple of things. One, usually in these sort of adjustments, equity shareholders will sacrifice their claim, yes or no? They will check the face value of each equity share and preference shares and make a mental note of it. Here, how many equity shares we have? 5. Face value, Europa? 10. 20,000 preference shares, how much face value? No. Okay, Naji. This is good enough for me. And we know in internal reconstruction, it's done by which company? Loss making company ka P&L will have a debit balance or credit balance. debit balance. Check P&L debit balance. That's the reason they've shown this. Usually this will be shown as a negative. It's a typo. It's okay. Fair enough. They'll show this in bracket. Okay, this one I need. Fine. Then what I probably need is, I don't need anything else beyond this. These two, just keep a mental note of it. Why am I have to keep a mental note of this? Can you help me once again? Why should I keep a mental note of this? Because should I keep this or should I write it off? So just be aware of that. Then straight away, you don't have to worry about notes to accounts. Directly, you can dive into adjustments. That's all. Just face value, P&L debit balance. Just check if any other reserve is available. Sometimes some reserve will be there. Other than P&L, they may give you general reserve or capital reserve. Just watch out for those. Okay, and then move on directly to the adjustment. So let's go to the adjustment. Check this. One. Preference dividend came. Preference dividend. The moment dividend comes, what is the first thought process? Go back to balance sheet, right? And check on the liability side. Am I seeing any dividend here or no dividend? No dividend. That means, is dividend declared or not declared? Dividend is not declared. Clear? Now, what do you think adjustment will say? What do you think adjustment will say? Preference shareholders have become Karna and they are ready to sacrifice. Entry required or not required? If it is 100% sacrificed, then entry not required. Got the clarity? So let's read through that. Preference dividend is in arrears. Arrears means not yet paid. For how many years? 2 years. Great. We will see what to do for that. Usually ICA will scatter the information. Here they will give one. Then somewhere in 7th or 8th adjustment, they will say preference shareholders are ready to sacrifice. They will scatter. That's ICA favorite part. We'll see. We'll come back to that. Okay, now look at this. This is one good adjustment. Mr. Y holds 60% of debentures. Mr. Z holds 40% of debentures. So do we have debentures in balance sheet? Yeah. How much, people? 16. This debentures is subscribed by 2 investors. Who are those? Y and Z. Y holds how much? 60%. Of the 16 lakh, column with a pen, I think it's not writing properly. Okay. Maybe they forgot to charge. All right. Okay. During the break, I'll see. Okay. In this 16 lakh, how much is Y holding, sir? 60%. 16 6 are 96. So 9 lakh 60. 16 4s are 64. So this is 640. Correct. So this is how much is being held. Yes, sir, people. Now, do you think they will hold on to this or they will become Dharala Prabhu? They will become Dharala Prabhu and ready to sacrifice. We will see this. And moreover, 1,60,000 were also payable to Y and Z respectively as trade payable. Trade payable means creditors. Okay, that means we have to pay 2 things to Y. Tell me, what are those 2 things? Company has to repay Mr. Y debentures worth how much? 9,60,000. Similarly, because Y is also a creditor, we need to pay him as creditor how much? So basically, we have to settle 2 amounts to Mr. Y. One is for debenture, another one is for creditors. Is that okay? And one hidden adjustment will be there over here. Sometimes what happens, if it's a loss-making company, some interest also could be outstanding. Some debenture interest can also be outstanding. Go back to the balance sheet, check, are you able to see debenture interest? Oh yeah, how much? 60,000. Correct, Ajit. Whom will you pay the debenture interest to? Whoever has purchased the debenture. Who has purchased the debenture? YAZ. Y holds how much debenture? 60%. That means total interest payable is how much? 1,60,000. In this 160, how much is payable to Y? 60%. 1,60,000 ka 60% is 96. And balance 40% is payable to Z. That means we have to pay not 2 things, but 3 things to Y. What are those? Debenture, interest outstanding on debenture, and credit. Got it? Same thing for Z also, but by a different amount. Move on. Done. Okay, leave that. Now come back to this, or maybe fine, it's okay. I think I'll finish on this. All equity shares to be converted into fully paid up equity shares of 5. Go back. We have already underlined. What was equity share capital ka original face value? 10. Is it 10 now or it has become 5? From 10 it has become 5. That means equity shareholder Happy or Goinda? How much Goinda? From 10 it has become 5 means they are ready to do how much Goinda? 50% or half. Correct. Entry, you know. Tell me. Chappandi. Old equity share capital, cancel. Enna entry. Equity share capital account debit, 50 lakh. 50% go in the routed through which account? Recon account. 50 lakh ka 50% is how much? That means the new equity share capital will be. That's it. Okay, G. This is the end. Move on to the next. Alright, next one. What about preference shareholders? They also go in the preference shareholders are to be reduced to 50 pa. Come back to balance sheet. How much was original? Original was 100. The revised is 50. That means preference shareholders also how much go in the 50% go in the. How much preference share capital? 20. But preference share capital. No, do not forget the percentage. Use the same name as given in the question. Sometimes they will say 10% redeemable preference shares. Sometimes they will say 10% convertible preference shares. Whatever name is used in the question, use the same name. What is the name given here? 9% preference share. Entry. Chappandi. One entry. 9% preference share capital account debit. 20 lakh. How much go in the 50%? Go in the to recon. Balance is a new preference share capital. That's it. And any journal entry should be compulsorily followed by narration. Whether question says or does not say, you still have to pass a narration. If you don't pass narration, 2-3 marks go in the for you also. Okay, G? Yeah. The question will not mention it. That's a hidden thing. If question by chance says narration is not required, then you don't become Dharala Prabhu and say, I will write. No. First of all, time not there. So don't do unnecessary things. Okay, check and accordingly write. Next. What is the next? Here. Okay, I think we didn't read. Preference shareholders are ready to 50 each. That's one part of the same adjustment. Some more part. The preference shareholders, read this line carefully. The preference shareholders agreed to forego. Forego means sacrifice. Go in there basically. Preference shareholders agreed to forego their arrears of preference dividend, in consideration of which 9% preference shares are to be converted into 10% preference shares. So preference shareholders want their, how many years dividend was in arrears? 2 years. They want that dividend or they're ready to sacrifice? They're ready to sacrifice. Is a dividend account there in your balance sheet? No. Is it paid or fully sacrificed? Fully sacrificed. Tell me, for dividend sacrificed, entry required or not required? Done, G. So this is sorted. But old preference shares was how much? 9%. Are preference shareholders ready to take in 9% preference shares or they want a new one? They want a new one. But new one will carry 9% dividend rate or 10%? That means revise the entry for me. Revise that entry for me. When you pass the go in the entry for preference share capital, you have to pass the entry 9% preference share capital account debit 20. 50% they sacrifice. That goes to recon. But don't credit 9% preference share capital. Now credit what? New preference shares is worth. This is it. That's all. Move on to the next. Alright, G. Next. Now Mr. Y is Z. Go back. What are the 3 things payable to Y? Debentures, interest on debentures and credit. Now they will say he is ready to sacrifice. So let's see. First, maybe we'll read off the things. Mr. Y and Mr. Z agreed to cancel 50% of their respective total debt. Take a calculator. Patapat you take. How much we have to pay to Y as debenture? 9,60,000. How much we have to pay for outstanding interest? 96,000. How much Mr. Y is a creditor for? Mr. Y is a creditor for 1 lakh. That means what is the total debt payable to Mr. Y? Adding all. 11 lakh? 56,000. Yes, Saru. Correct, Saru. No. Y is ready to sacrifice anything of this? Yes. How much? Y is ready to cancel 50% of their respective debt. Take this and multiply 50%, sir. 5 lakh? 78. This 578 is what? Sacrificed. Sacrifice will go to which account? So you got the amount. Fine. Now what we are saying, let's see. Excuse me. Mr. Y and Z agree to cancel 50% of their respective debt, including interest on debenture, which we have already considered. Mr. Y and Z also agreed to pay 1,60,000 respectively in cash to receive new 12% debentures. Go back to the question. Existing debentures carries what interest rate? MX. Y is saying I will sacrifice. But I don't want 10% debentures anymore. I want new debentures which carries what interest rate? 12%. That means old debentures there or gone. You have to cancel old debentures and issue new debentures which carries what interest rate? Fine, people. This is only for Y or also for Z. Make me happy. I've come from very far. Bengaluru, right? What is the entry? You can pass the entry multiple ways. Compound is okay. I think in our class we used to pass simple journal entries. Tell me. Let us see. I'll give you 2 minutes. Fatafat, we don't have much time. Make an attempt and clear that attempt. One. This debenture is there or we should cancel? Why cancel? Because is Y ready to take 10% debentures anymore or they want new debentures? And new carries 10 or 12. So 10 we have to fully. Yes, sir. Fine. But we are doing cancellation entry for Y separately, Z separately. Just for better clarity. So that means will I debit debentures by 16 lakh or only Y's ka percentage? Okay. How much is Y holding in this? He's holding full or 60%? What will be the entry? I'll show you simple. I think they have done compound. I'll show you the simple journal entry for a little more clarity. Tell me, sir. Why? What entry? First journal entry. Chappandi. Fat. You tell. 10% debentures. We should keep it or cancel it? 10%. Why are we debiting? Sir, debenture is a liability. Liability has what balance? See, under non-current liability, debenture is coming. So, debenture has what balance? Credit balance. How do you cancel something which has credit balance? Debit it. So, the entry will be 10% debentures, a debit. What is the total debenture? 16. Are we cancelling fully or we are cancelling Y related portion? Y ka portion is how much? So, how much is this? No. We have to pay Y only debenture or there is outstanding interest also? Go back to question ka balance sheet. What is the interest outstanding on debenture? 1,60,000. It's coming under which side? Current liability. Outstanding interest obviously is a current liability. It has what balance? Credit balance. Fine. Is Y wanting this or he wants new debentures? He is saying whatever you have to pay me, cancel that and give me new debentures, but the new should carry interest rate of 2. So is this liability required anymore or not required? How do you cancel it? Interest on debentures account, debit, or you can call it outstanding interest also. How much is that? 1/6. We are passing fully or Y separately? So how much is this? Then these are two things. But Y has only 2 components or 3 components? What is the third component? Y is also a trade payable for or creditor for how much amount? Creditor has what balance? Credit balance. How do you cancel? Means one more entry will pass as one. Creditors account, debit. Goinda, don't do full Goinda. How much is total creditors? 5 lakh. Don't debit 5 lakh. Right? Y, who is one of the creditor here, he is saying I am ready to sacrifice 1 lakh. So cancel only that. Creditors account, debit how much? Yes, sir, Sirji. Fine. All these 3 are payable to whom? Y. That means Y is our, in a way, our creditor. We have to pay him. So if you want to pass simple journal entry, you can write to Y. How much? Adding all this, how much will you get? Tak. 11,56,000. That's all, or Y is being more karna? Why? Sir, Y told instead, in spite of cancelling all these 3 things, he's saying I will also pay how much? Read this adjustment. Mr. Y and Z also agreed to pay how much? 1 lakh to the company. Sir, if you receive 1 lakh from Y, what is the journal entry? Cash received from debtors, what is the journal entry? Bank account debit to debtors account. Here Y, we are recovering some money from Y. What entry will pass? Bank account debit. Yolo, sir? 1 lakh. To whose account? Y account. How much? Got it. Yes, sir. Okay. How much now we have to pay Y? 1156 plus 1 lakh. That means Y account is showing how much balance in our books? 12,56,000. Can we keep it, or Y asked for something? Asked for something. What did he ask? 12% debentures. So we paid something to Y. When you make a payment to Y, what is the entry? If you pay cash to Y, what is the entry? Y account debit to bank account. So Y account debit. Total Chapandi sir, these two addition is how much? 12,56,000. Did we pay cash to Y? No. We paid 12% debentures. But Y also sacrificed, no? Yeah, we already calculated that. How much is that? 5,78,000. Goinda. Where Goinda? Recon. So that means in this 12,56,000, 578 Y is ready to sacrifice. We calculated here. Hope that is okay with you. Yes, so people? Yes, no, pakka no. Okay, so 578 goes to which account? Recon account. Balance how much? 6 lakh? 6,78,000. For this 678, Y is telling me, give me one thing. Give me one new thing. What is that new thing? 12% debit. So for this 678, you have to credit 12%. Okay, Naji. Some problem hai, ICA passes 3 individual entries like this. In this, what they have done is they have done a compound. If you do compound entry, then instead of using Y, if you sum up, see, if you do compound journal entry, here what are you doing? Here you're crediting Y, here you're crediting Y, and here you're debiting Y. Y you remove. And that means what is the entry? Tell me, sir. Compound entry will be what? 10% debentures account debit, interest on debentures account debit, creditors account debit, and then bank account debit, to recon account to 12% debentures. That's what you will see in solution. Some RTPs will have this solution. That is what they passed here. Clear, Raji? But yes, your choice how you want to pass. Either as 3 separate journal entries or 1 compound journal entries. Both are acceptable. Now you got the idea of it. You want me to discuss Z again, or interest of time can I move on? Got it? Same calculations but different amount. That's okay, no? Fine. The intention is to just quickly review it. That's fine with you? We have solved this question, by the way. Don't spread rumors. He does like this in class. No da. We take 3 days or 4 days just to complete this topic. Okay, we spend a lot of time. Don't just like the 200 hours will not happen. This is marathon, so simply we are doing few things. So, okay, done. Next, you're saying good. So I'll move on. Last section of people. Though I'm not able to see you all. Okay, no. On a serious note, it's helping, right? Pakka, it's helping. No, hey, tell something. Huh? At least you tell. No, they're smiling. Yeah. Okay. Read this. Persons relating to trade payables other than Y and Z also agree to forego 50%. Sir, what is the total trade payable in balance sheet? 5 lakh. So in this trade payable, Y holds how much? 1 lakh. Z holds how much? 60,000. Y holds 1 lakh. Z holds 60. Total is how much? 5 lakh. Correct. As per the question, total is 5 lakh. In 5 lakh, Y is a creditor for 1 lakh. Z is a creditor for 60. That means only Y and Z are creditors, or there are others also. How much is the others value? 3 lakh. Done. For these two, should we have to do anything or already cancelled? Previously only we already cancelled. Now they are not talking about these two. Read the question. What are they saying? Trade payables other than Y and Z, which is how much amount? Which is how much amount we got? 3,40,000. Other creditors are 3,40,000. What are they ready to do? They are ready to sacrifice 50%. Entry Chapandi. In this 340, they are ready to sacrifice 50%. So 340 ka 50% is 1,70,000. Entry. Trade payable account debit to recon account 171. That's it. You don't have to show any calculations. Directly you can put in. I mean, you can calculate it orally or in your calci and put the numbers. Move on. Yes. Okay, next. What is the next? Directors waived. Forego, sacrifice, waive, all are same. Now, directors are ready to waive or sacrifice how much? 60% of their loans and accepted equity shares for the balance. Go back to the question. Has director given us any loan? Check on the liability side. Here, loan from directors is appearing on current liability side. How much? Yes, sir, Sarji. Okay. Loan from directors, how much value? 1 lakh. Now, this is settled or sacrificed? Sacrificed. Fully sacrificed or directors is ready to sacrifice how much? 60% of this 1 lakh loan amount they are ready to sacrifice. Balance 40%, can you keep it as a loan or you have to settle? You have to settle. Me telling or question saying? By what? Equity shares. Tell me the entry. A liability, director's loan is a liability which is shown in our books for 1 lakh. There or settled. Some portion there or some portion settled, some portion sacrificed. I mean, this liability should be fully taken out. What is the entry? Director's loan account debit, 1 lakh. How much they sacrificed? 60%. Sacrifice portion which account? To recon account, how much? Balance 40 you have to settle. If you settled by cash, you would have credited cash. If you have settled through banking channel, you would have credited bank. Here you settle through cash or bank or equity shares. If you settle by equity shares, will the company credit equity shares or equity share capital? Whenever a company issues equity shares, it is a capital for the company, no? So you will credit equity share capital as 40,000. That's it. Over, Ajay. Next, capital commitments of 3 lakhs were cancelled. Loss making company, no? They have some contract which is they have already signed. Okay. Now that signed contract is going further or it got cancelled? Got cancelled. Sir, if somebody cancels the contract, will the other party keep quiet or ask for compensation? Compensation. So that means there will be some penalty and all here because we have cancelled the contract. On payment of how much penalty? If a company is paying penalty, for a company it is an income or an expense? You already know the thumb rule. For all the expense in this chapter, what is the entry? Reconstruction account debit to bank account. How much? 15,000. That's what they must have passed. Recon account debit to bank account 15. Easy. Next. Directors refunded 1 lakh of the fees previously received by them. Wow, Umma directors, I tell you. Super duper directors. Sir, previously, I don't know when, maybe last year or few years before, we had paid them some fees. Directors ka salary we had paid. How much? 1 lakh. Now directors are take your fees back. Directors are giving their salary back to the company. So for the company, this is an expense or like an income. When the company paid this fees to the director, it was booked as a expense. Now the same is getting recovered. So it becomes what? Income. For now here one income you will route it through P&L or here everything to recon. What is the entry? Bank account debit to recon account 1 lakh. This is for the fees refunded because it is like your income. Perfect. Next, reconstruction expense paid 15,000. Obviously, there will be some you'll have to hire some consultants and all for all this. No, maybe you'll have to file some documents with ROC or SEBI or whatever. So there is some recon expense. How much? 15. Sir, you know already entry for expense. What is the entry? Recon to bank account. Okay. Next, taxation liability was settled for 75. Go back to balance sheet. Are you able to see any tax as a liability? Check here. Yeah, we do have provision for tax. How much? 1 lakh. Okay, provision for taxes 1 lakh. Is this sacrifice? Government will sacrifice. Do you think any government will sacrifice? Swaha. Our Nirmala Sitaraman will say, give me more, not less. Yeah. All right. So provision for taxation, we are showing how much is liability? 1 lakh. But how much did we settle it for? So government sacrificed. Provision means it's not a pakka number, it is an estimate. Provision is an estimate. We initially estimated the tax liability as how much? But finally, when we did the proper calculation, it came to only 70. Government is not sacrificing, just that we overestimated the liability, which is getting reduced. So tell me, what is the entry for this? It got settled at 75. Provision for taxation account debit 1 lakh. Oh, okay. Did we pay 1 lakh? If you had paid 1 lakh, we would have credited bank 1 lakh. But we settled for how much value? So you will credit bank to the extent of 75. But that means indirectly 25,000 is overestimate. Just 1 second. Right? Right. So you usually you'll have to credit what? P&L. But in this chapter, P&L also is getting written off using what? Recon. Hence, 25,000 balance also will be accounted through reconstruction account. This is the entry for taxation liabilities. Maybe another half an hour, I'll give a break. That not time. People, some of you are parked in some front of Punjab National Bank. So some bank employees are ready to come in now. Kindly take that and park it somewhere else and come. Whoever has parked it in front of the bank, whoever, I don't know who it is, you yourself will know it, right? So kindly do that. Yeah, that's it. Thanks. So can we continue? Bike seal, sell it seems. Next, they say, sell it, it's okay, old bike anyway. Okay. Sir. Assets are revalued. Now, usually majority of the assets will be what? Overvalued, where we'll have to reduce its value, but there could be some assets which could be undervalued. But majorly we see we have to reduce the value of the assets. 1 or 2 we will see. So many is not required. Check, sir. You revalued land and building to how much? 32 lakh. Go back to the balance sheet. What is the land value? 30 lakh. In your balance sheet, you are showing the land at 30 lakh. But its revised value is how much? 32 lakh. Sad face, happy face. Happy face. Why? Where asset ka value is reducing or increasing? Increase. Asset has what balance? Debit balance. How do you increase something which has debit balance? Debit. So what is the entry? Land, don't say asset, use that specific name. Land and building account debit, 2 lakh. How 2 lakh? From 30 lakh, it has become 32 lakh. So the increase amount is 2 lakh. Land building to recon account, 2 lakh. So this is asset not getting, there's an asset ka reduction or appreciation. This land has got appreciated. Okay, next, check plant and machinery. What is the revalued amount of plant and machinery? 6 lakh. Come back to question ka balance sheet. Plant and machinery, how much? 1250. Now happy a full side out. Sir, we are showing the asset at 12.5 lakh, but its revised value is only 6 lakh. How much reduction has happened? 6 lakh. Asset has debit balance. To reduce, what we have to do? So the entry will be what? Recon account debit. They've done a compound entry for this. Recon account debit to plant and machinery. 6 lakh. For all the assets which are getting reduced, you can pass it individually or you can pass a compound entry like they've shown it here. The choice is yours. I would suggest to do compound in exam, because if you do simple journal entry, for each entry you have to pass a narration. When you do a compound, you can save some time in the form of narration. Okay, so that approach, if you want, you can follow. For all this, again, you want me to pass the entry or you got the base of it? That's okay, no, just still have to pass. Recon account debit to respective asset account. Okay, you are required to pass the journal entry, which I think we already did. And they're saying check, including the amounts to be written off for. The word write off in accounts means cancel. The write off simply means cancel. What and all we need to cancel? Goodwill, patent, loss in P&L. This they have to tell or we already know? This we already know. Any which way we will do. Other than this, we also need to cancel 2 more things, which is what? Goodwill or patent. Fine. Sir, goodwill is an asset, patent is an asset. Both has what balance? Debit balance. How do you cancel? Credit. P&L also has what balance? Debit balance. That means you want to pass simple journal entry or compound. What is a compound journal entry? Reconstruction account debit to goodwill account. Only 10%, 20% we have to cancel or full write-off? Sir, when the adjustment says write-off, when the question says write-off, it is always what write-off? 100% write-off. Or sometimes they will say cancel 40% of goodwill. In that case, you will only write off 40%. If percentage is not specified, it is always 100%. So all these 3 have debit balance. So you'll cancel it by crediting. So the entry will be recon account debit to goodwill account to patent account to P&L debit balance. All that they've incorporated here only. Fair enough in this entry basically. Goodwill, patent and P&L I think is there in the next page. Okay. Anything else is there? Nope. Yeah, they've asked bank account. Bank. When they ask bank account, they're asking bank a ledger account. The journal entry ka posting, you'll have to do it in the ledger. But always remind yourself of few things in internal reconstruction. Whether question says or does not say, we will compulsorily cancel what? Preliminary expense, deferred revenue expenditure. Anything there? No. P&L debit balance. P&L debit balance is still available or we cancel it? We cancel it. Yes. After doing all this hangama or drama, if reconstruction account still has any balance, what do you do? Transfer it to capital. How will you know whether reconstruction account has balance or not? You will have to prepare reconstruction account ka ledger, which they have done here. By passing, when you prepare a ledger, ledger will not get balanced. Debit side total, credit side total will not match. There will be a difference. Here the difference is 7,75,000. What will you do for that difference? Transfer it to capital. This is the last entry. First do this working note and then pass one last entry. What is that last entry? Transferring the balance from recon to capital risk. So that is the entry that they have passed here. They have done it in compound here only. If you want, you can pass separate journal entry, recon account debit to capital risk. That's all. Okay, G. Yeah, I think this is fine. So usually this is the level of things they ask. They also usually ask balance sheet also. Couple of things in balance sheet. I think I'd like to bring it to your attention here. I think I don't have time. So I'll just not cover the questions. I'll just tell what this is. Sir, internal reconstruction is that way a big activity only. Yes or no? Suppose you are a new investor. You are a new investor who wants to invest in this company. Don't you want to know about this? You would like to have information about this or you don't want to know? You want to know. Hence, whichever company has done an internal reconstruction, no? When they prepare a balance sheet, normally what is the heading of balance sheet? Let's say XYZ company. What is the heading you will give? Balance sheet of Messrs or XYZ company as on so and so date. Here you have to add some words called, where I'll show you, wait. When you prepare balance sheet of A and Co, you will not just leave it at that. In brackets, you will call something called and reduced. When you use the word and reduced, it is an indication which you are giving to everybody who's reading the balance sheet that this company has done something called internal reconstruction. So whenever you prepare balance sheet in the exam, you always should not forget to add these words and reduced. That's another thing. Okay, Raji? Yeah, there's another pointer. Fair enough. Okay. Maybe one more thing, maybe I'll tell you with the help of this. I'll not take you through the question. I'll just written some comments. I'll go take you through that. Sir, bank overdraft. Bank overdraft means what? It's basically a loan, short-term loan taken from the bank. Loan taken is an asset for the company or a liability? Liability. Sir, as per our Schedule 3 of Companies Act, no, bank overdraft, no, you should not show as a separate liability, but it is part of cash and cash equivalents. You know, under current assets, you show cash and cash equivalent. So under this category only, you should show bank overdraft. Again, as per the Schedule 3, because it's anyway part and parcel of that. Okay, Sarji. Now, what our ICI, mother body, does is, they do a little bit of hangama. I don't know why they do that, but that they are doing it. So it's my duty to inform. Okay. All right. Now, what they do is, just I'm taking a hypothetical scenario. Look at this. Suppose cash and cash equivalent balance is how much? 50,000. I've assumed. Bank overdraft balance is how much? 195. So in this case, cash balance is only how much? 50. But loan balance is how much? 195. So do we have enough balance here to adjust bank overdraft? So when this scenario comes, what ICA questions does is, they show 50,000 separately on the asset side of balance sheet as current asset. And this bank overdraft, they separately show it on the current liability side. Meaning bank overdraft, are they showing it as part of cash and cash equivalent or separately? Separately. When we have enough balance or shortage. In case of shortage scenario, cash and cash equivalent, they show it separately, bank overdraft separately. But suppose let's take the ulta scenario. Cash and cash equivalent is 195. Assumption. Cash and cash equivalent is 195. Overdraft is how much? 50. In this case, what they do is, they net off these two, because this will have what balance? Debit balance. Bank overdraft will have what balance? Credit. What they do is they net off. When you net off, how much you're going to get? 1,40,000. This netted off number they'll show in the balance sheet under cash and cash equivalent. This is being done in some questions of internal reconstruction. Done, people? Got the scenario? when you refer ICA questions, you'll get both the things which I explained it here. Both these questions are there, or these sort of questions are there in ICA study material. Pakka ji? Okay ji. And that's what I've written here. I think that should be good enough. All right, people. Thank you.